So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani. I'm joined today by Dave Childers. Mr. Childers is a managing member of Residential Investment Advisors and Cedar Rock Capital based in Nashville, Tennessee. Mr. Childers has over 17 years of experience in real estate investing in Middle Tennessee. Cedar Rock Capital has over 300 multifamily units located throughout Middle Tennessee and Pensacola, Florida. He is actively involved in the daily operations, asset management, and all aspects of the operation on these assets. 10 years ago, Dave saw a need for a brokerage firm that focused on small multifamily properties and investors. Over these years, David has built Residential Investment Advisors into a successful brokerage firm. Dave has brokered over 600 multifamily properties in Middle Tennessee, Northern Alabama, and Southern Kentucky. He has advised hundreds of clients throughout the years with purchases as small as 2 units and as large as 1,100 units. Dave also serves as a managing broker for Millennia Housing Tennessee, which currently holds over 2,500 units from Memphis to Johnson City, Tennessee. Dave and his wife, Laura, and 2 children reside in Lebanon, Tennessee. Dave is frequently called upon to speak at various investment meetings around Middle Tennessee area. He has recently become a board member of the local real estate investment club. Dave, that was a very long intro. I love it very much. Thanks so much for coming on.
Thank you for reading that entire thing. I didn't expect that, but hey, great. I'm glad you read the whole thing. And so thank you, Jonny, for having me. It's great to be on your show today.
Absolutely. Yeah. I mean, I guess I could have shortened it, but you know what, I like to highlight, you have a very storied career, so we got to get to it. So let's kind of start at the beginning here. Like I mentioned in the intro, you got 17 years of experience. So let's go back 17 years and what kind of brought you into this world?
Yeah, I moved to Nashville to work in the music business like a lot of people. And after a couple of years of doing it, just decided, hey, this wasn't for me. But traveling the country, I met some great people, and a few guys I met early in my career out in California, kind of gave me that first little start and said, hey, if you ever find deals that you need funding for, call us. We'll lend you hard money. We'll lend you money. We'll do deals. This was in 2005, 2004, and so kind of when I just planned my exit from the music industry. I was thinking flips. And so I called these guys, and, we starting to do deals back then. And we were actually on a TV show. I don't talk about this a lot, but called Flip This House. That used to be on TLC. Did an episode of that, and, started flipping and buying houses and got my real estate license, and, really just dove in, started wholesaling like a lot of people learn. And then, we were flipping houses, and I kind of thought, man, we're adding value to these houses, and we're selling them, and we're not seeing that appreciation, right? You get that one big paycheck on a flip, but you're not seeing that value add over the years. And so, I think that's kind of when the light bulb started going off. Instead of flipping to sell, let's flip to hold. So we started buying properties, smaller multifamilies, and then in 2007 we bought our largest asset that we still own, and it's a 114 unit complex. And I tell people that's really what gave me my MBA into the larger multifamily space. Because again, I was just on another podcast. I was saying, we traded. I was a broke, music guy in Nashville, and I met this multi-millionaire California guy, and he had money but not time, and I had lots of time but not money. So we traded what skill set and what we had to leverage at that time, and it was a perfect relationship. And a lot of those, you always hear partnerships and things don't go very well, but I can happily say after 17 years that he and I are still partners. We're still very, very close friends. My kids that are 16 call him Uncle Jim, and so we've got a great relationship. And working. And so that's kind of where it all started back in 06 and 07. Buying and living through the crash. A lot of people I meet these days, kind of have forgotten what happened. And then that's kind of where the brokerage firm kind of rolled out is I hadn't done what you're doing, right? You're learning about, raising capital and gonna find deals. And I hadn't learned that. I had met one or two very smart guys that had money. But I didn't have a good, network that I had built of passive investors, right? So when all these REO properties I started seeing popping up, I didn't have the capital, raised to start buying those deals. And so my brain went, let's broker them, right? I can't buy them, and I know they're good deals. I know these are great assets to own for long term, but I didn't have the capital raise, and I was still young, and banks weren't giving me financing. And so that's kind of where the brokerage firm came about. Is I said, look, at least I can make some money off these deals. And so that's really where we started in around 2009, 10. I said, I'm just going to broker all these small multifamily deals. So, found a couple great clients that could see what I saw the cash on cash returns and just a tremendous value that were in these deals. And, now looking back 12 years of owning the brokerage firm and 600 and some odd deals we've sold, I wish I would have been doing what you do and raise capital, because I was saying this earlier. If I would have bought, 10% of what I brokered that were amazing deals, I'd be, retired on an island down in, the Bahamas right now.
Yeah, I mean, well, it sounds like you made it out pretty well, especially considering how many people, got crushed. So you obviously had a single family portfolio. Sounds like that made it through the 08 crash then.
Yeah, so my advice to everybody is always just get long-term debt, right? Because if you're in one of those, the bottom of a market and you're having to refinance and your values are in the toilet, you're stuck. And I think that's where, it wasn't fun, to deal with the crash. But everything we had was cash flowing, and it paid for itself. I definitely wasn't, walking home with hundreds of thousands of dollars. But I knew it was short-lived, I guess. And that was one of those things that was like, I did see a lot of guys, and really disappointed me. It made me think, about a lot of people differently, because they just gave up. They just I'm not dealing with this. I'm just going to give it back to the bank. And I said, well, you committed to pay this debt back. And, again, I talked a lot of my friends out of, that needed to sell a house to say, hey, don't sell it right now. Let's just rent it out, right? You might be losing, $50 a month right now on the rent, on the mortgage to rent, right? But if you sell it right now, you're going to lose 20 or 30,000 or more money. So let's just rent it. And I helped a lot of people kind of just, get through those couple of years. And I said, values are going to come back, and lending's going to loosen up, and maybe it's gotten a little too loose now. Yeah, so, that was my advice is, we just got to live through this. And, the pendulum had swung from these two extremes, right? They're giving everybody money one day, and then the next day, I had clients that were having to bring 80% to the table to get 20% loan, right? And so I love when I hear people now say, I'm going to wait for another crash. I hate to say it to them, but you're not going to get financing. You're not bankable. You don't have a job. You don't have capital. You don't have experience. You don't have all this. You don't understand that the abundance of deals was because of the lack of capital, and these banks that were controlled by the Fed weren't giving anybody money. I had people worth 7-8 figures that were, trying to go to banks and get loans on $100,000 duplexes, and it was still like pulling teeth. And so I always laugh about that is, I'm gonna wait till a crash. And I'm like, if you just wait, because you just won't get a loan. So, and that's why, there was abundant deals, low capital. Right now we have lots of capital and no deals, right? Or lack of deals. And that's kind of how this market works.
Absolutely. Yeah, you really nailed that on the head. We're kind of, the pendulum has swung back the other direction now, and obviously abundance of capital. So obviously you're on the brokerage side. So kind of talk about now being on that brokerage side. You obviously recognized a need. Sounds like that market got hit pretty hard. So there was an abundance of supply. You saw the fit, brokered the deal. So with that now, what are you seeing in terms of, being on the brokerage side and having to you know, take on some of these deals that, you know, may not be what people are really looking for. How are you sort of navigating that in terms of, you know, finding investors who will take some of these deals on?
Well, let me hit on this point is during the crash, those properties went into foreclosure or whatever, 99% of the time, not because of the asset, because of the operator. Okay. And so we saw deals all the time that you go talk to the renters and they would say, I've been paying my rents, right? Or rent that would have covered the mortgage, would have covered cash flow, all those kinds of things.
Wow.
What was happening was those people were robbing Peter to pay Paul. So those owners were taking the rents, not paying the mortgage payment, but putting in their bank account to pay for their, $1 million house and all this stuff that they had financed. So it
Right.
wasn't the asset's fault, it was the operator fault. And I think that's a big thing to think about these days is who's operating these properties. And are they going to be able to weather those storms, and it could be that's on the last podcast, I was talking about one of my properties down in Florida got hit by a hurricane 2 years ago, and, you have $100,000 deductible. Do you have the capital sitting there ready to pay that deductible to, pay for the insurance claim, at least float it, or you're going to have to go back to, your capital and ask those guys to write another check. So yeah, I found a niche here in Nashville that, we tell people we're a hybrid between a residential agent, a commercial agent. There's a space where, residential agents don't understand cash flow and cap rates and the lingo and how to underwrite these deals. And then the large brokers, they just don't really want, to deal or mess with, 20 or 10 unit complex. And it's a different ball game. I've got a friend who has brokered, I think last year they brokered over $2 billion in large multifamily deals. And who calls on him and who calls on me, two different types of people, two different types of assets, lending's different, management's different. And so we've really, found our little thing and how to sell these and how to underwrite them. But back to, your question about who's buying the deals and finding these, right now there's just so much capital out there that's looking to go somewhere. And we've always had out-of-state investors. California obviously is a big place. We get a lot of money coming into Nashville. But I think it's on hyperdrive right now. We've had people sending their investment dollars to Nashville and Middle Tennessee. But now we're hearing, not only am I sending my investment dollars, I'm selling my primary house, I'm moving out there, I'm done. And I think that's just been a huge, it's on hyperdrive right now in the last maybe year, maybe since COVID and some of the lockdowns and, just political climate.
So would you say that's the main factor? That's definitely something I want to touch on is what is really driving that huge push into that area all of a sudden. And certainly, I mean, I've always loved Nashville, but I never knew it as a place where everybody wanted to live. And now all of a sudden, one of my very good friends moved there within the last year, and I have lots of friends, it's on their radar. So kind of talk about what's really driving that. I know no state income tax is probably a huge factor as well, but, touch on some of those points.
Yeah, I mean, that's a great one. No income tax, landlord friendly, right? During normal operating, I tell people, we can, tenant that doesn't pay within 30 days, we can have them out. So, it's very landlord friendly. Tech, we're Oracle's just plan to move here to Nashville. And even during the crash, we don't have, California has these really high highs and these really low lows, right? They huge, we've just been, I say steady Eddie, right? Like garbage pail kids, right? Like just continued growth, with automotive, right? Huge automotive, Bridgestone, Firestone, Nissan, Chevy, the list goes on and on. Mitsubishi just moved here. So healthcare, we've got hundreds of healthcare companies here in Nashville. Now the tech stuff is starting to move here. Investment firms from New York moving here. I'm part of EO, entrepreneurial organization, and we've got a really, really strong, I think our EO chapter here in Nashville is over 350 members. It's the largest EO group in the whole North America. I think it's the third largest in the United States, or in the world, excuse me. So there's a lot of entrepreneurs here, tech. It's just a great place to live and raise your children, and you got pro sports. We've got obviously tons of entertainment, lots of bachelorette parties that come here. You could, could use, could do without most days when you're trying to like go to a business meeting and you're behind like a pedal tavern and girls in cowboy boots and pink hats. But it's a fun place, right? You got the Titans, you got the great Predators, hockey teams. So it's just a great place to live, and no state income tax, great, but it's definitely growing. And hopefully Nashville does smart things and not stupid things to keep the growth going. That's my only concern always is property taxes and schools, and when will that kind of slow down? But the U-Haul trailers are definitely moving in full force from California to Middle Tennessee, not just Nashville. It's everywhere. Nashville's the hub. Nashville's what everybody talks about, but communities an hour and a half each way, north, south, east, west, are continuing to see the same amount of growth.
Absolutely. And it's crazy because, my, so I have a half brother who we were raised in different parts, and he was raised in Chattanooga, and I didn't know that anyone knew where Chattanooga, Tennessee was. And now all of a sudden I have friends talking about buying a house in Chattanooga. And I'm like, so it obviously it sounds like Nashville is very much the primary now. And all of these tertiary and secondary markets are starting to really see an influx. So are you starting to see a lot of, you're on the smaller side of things. Are there a lot of smaller deals in those areas that are starting to really pop up, or are these areas where there's a lot of big 100+ unit?
Yeah, I mean, we have a pretty decent supply. There's other markets I've seen in the past that have a lot more smaller stuff, but we've done pretty well finding these little mom and pop ran or properties an hour and a half. You talked about Chattanooga, Knoxville. These are places that actually for years have had a negative unemployment rate. I mean, they're just the companies are moving in, and the job growth, and I think that's another thing to think about Nashville. In 4 hours, you can be in Atlanta, you can be up in Cincinnati. I mean, that's why, like, if Nashville, there's Opryland Hotel, it's a big convention space. And because we're so centrally located on the Eastern Seaboard, it's made it a great place to live. And so, yes, I mean, these little complexes, I mean, maybe 5 or 6 years ago, I started kind of, we were selling a lot of Nashville REO duplexes, and that kind of started, that inventory started drying up. And so the next logical move for me as a broker was this finding capital or finding yield for clients, right? They were just looking to place money. And so we started going out, outside Nashville an hour and a half, and, seeing these little tertiary markets and these little cities that had a 10-20 unit complex. And, the problem you run into when you start buying those units is, management. How do you manage it? And that's kind of, the power behind my brokerage firm is we have a huge, vast network of vendors. And so if you come to us and try to find, we wanted to start investing here, we would introduce you to property managers and eviction attorneys and whoever else you need, insurance and lenders. And, we've got a great vendor network that we work all really, really well together to make sure that, we're taking care of you and you feel comfortable, right? There's a comfort level. If you're coming from California, moving your money here, the easier I make your job and the more comfortable you feel, the more money you're going to move here. And so that's something I found very early in my career and started going, hey, we need a good insurance agent that knows how to insure this and not lose a deal because, the client can't find insurance.
Absolutely. Yeah, that makes total sense. And that's really nice that once you develop that relationship with you and your company, that, you also have those other relationships that you've already done the work for. So let's kind of touch on and get into sort of that relationship. What is it, I'm sure you're fielding calls all day long. Obviously we've talked about how big the market out there is getting and investors wanting to move their money there. So what is it that really stands out in creating the relationship with you as a broker and the investor relationship, and then maintaining that relationship?
Yeah, I think that's a great point, because I think we have the people who call us one time and just expect us to, roll out the best property and give it to them. And, it's building a relationship. What does that look like? And what do you have to do? And I think for us, it's, coming here, right? Spending time with us. My agents are trained because I've got 5 agents that work for me. They're calling you and they want to get to know you, right? They want to know what's your investment strategy, like what are you looking for? Like, I was a finance major in college, and something you learn and doing finance and investing people's money is, I want to put your money in something that you feel comfortable laying your head down at night and you're not going to lose sleep over, right? And so really pinpointing what that is for you. If it's a Class D property and you're good and you can go to sleep and you don't lose a wink, that's great. But maybe I really want some Class A property. So, my agents are trained to really call and start to understand what you're looking for and then identify properties. We tell people we're matchmakers, right? We got a list of properties and a list of buyers and we're just matchmaking. And you'd be surprised how many times they want to get on the phone. Somebody sends an email, they want to get on the phone and talk to that potential client, and the client goes, or not a client because they don't become a client, but they say, I don't have time for this. So just send me properties, right? That's not building relationships. And so, it's funny. I'd say probably 50%, 60% we weed out right there because they don't even want to get on the phone with us and have a conversation with us. They just expect us to, hey, here's a property, you'll make $1 million, just roll it out. If you're interested in something, get on a plane and come here. I've coached for different gurus in the past. I'm always like, you gotta build that relationship. If you're interested in property, you need to get on an airplane or a car or wherever and get to that property and meet the broker and show me you're serious. When I bought properties out of state and found something I thought was a good deal, man, next thing, and I've wasted probably a lot of money, but I got on an airplane and went out and looked at the property, and then, some brokers went off my list as a buyer, right? Because they didn't truthfully, portray the property, what it was. And I spent, 2 days traveling to look at it. So, that's kind of where it starts, I think. And so building a relationship with brokers, and it's not going to happen overnight. It's not going to happen from one phone call. But I think again, something else I'm surprised about is follow up. I don't think buyers follow up with brokers enough. We can't track all the thousands of buyers, that we have. I don't know whether you have capital right now and are ready to pull the trigger, or you just used your capital and put in something else, right? So I think the follow up, and then, again, getting into our network, meeting the vendors that are in my network. And so that when we do find a deal, we know we've got lendings lined up for you, all the pieces, do you have the team here to actually take down an asset and then manage it properly?
Okay. That's really, really great insight, because I think the biggest thing, when you talk to any broker, number one thing is definitely going and actually shaking hands in person. That's I think the number one answer from any broker I've ever talked to. And so I think that's the biggest thing, like you said, and listen, I get it. You're in California. It's hard to just fly to Tennessee, but if you're really serious, and then why wouldn't you want to see the property anyway? And you know what? Make a list of 5 properties before you go out there. So you're not just going out there for one, go look at 5 of them and really, get an idea of the market, because you just looking at one is probably not really going to give you a good idea of what the market's like anyway, right? You're probably going to want to see at least 2 or 3, get an idea, maybe some different areas, some different neighborhoods, different things like that. So you really have an idea, because, listen, we do Class A, Class B, Class C, we say that, but really, yeah, it's different in each network, in each market, right? Like, truthfully.
Yeah, and we'll get you in the car and drive you around and show you. I'd rather show you a case study. Hey, we just sold this property. Here's what it sold for. Here's the rents. Here was the cap rate. Here's the type of rent you'll get. You see the deferred maintenance, and we'll drive you to another area. And you go, okay, I like that and that. So if you find something similar to one of those, I'm all about it, right? I don't like this little town. I don't like that street. I want something a little nicer. We'll spend that time with you in the car, driving you around and showing you assets like that. Again, because then I know exactly what you want. And if I bring you exactly what you want, there's expectations that you're going to, jump on it. And if you don't, then, we might not talk to you again.
Yeah, absolutely. So We mentioned in your intro, you kind of identified a niche for the, the smaller deals, but you have brokered the larger deals. So, kind of talk about what that looks like. Do those kind of just come once every blue moon, or, are you usually finding those coming up, fairly often?
No, what's happened, and I never saw this coming, is I've had clients that literally bought duplexes from me, built portfolios of duplexes, sold those, bought a 50 unit, and then grew it to where they own, they've done syndications now and are doing 5,000 or 6,000 units, right? Or doing 1,000 unit portfolios they're buying. So I've had a couple of clients that, have kind of climbed that ladder, started understanding, how the business works in a duplex and a value add and managing it, and then kind of had enough comfort level to move up to the next 50 unit and gone, okay, now I got a business model. Now I feel comfortable going raising capital. And so we have strategic partnerships with larger brokerage firms because we're not really chasing that business. That we're, I'm still involved personally, with these clients, and it's been a referral type thing, that I still stay involved in, residential investment advisors, right? So I still, I'm still kind of that person that they call to maybe bounce something off. Again, we stay in our lane, and I think that's what's made us successful. We don't try to go out there and, chase the, 700 unit complex or 400 unit complex. We know what we do very well. And like I said, we've got strategic partnerships set up for that, the random call that we do get, somebody looking, and again, the referral business, it goes both ways. I've got, clients have 40,000 doors that have the need to sell a 13 unit complex, and I do that for them. And, the bigger broker stays with them on the larger stuff. So.
Absolutely. I love that. That's a great point, really just about those relationships and like you said, staying in your lane. So I guess now let's kind of touch on some of the misconceptions from the broker side. What are kind of some of the misconceptions do you think that people have about brokers?
I think the biggest thing, I get the call like, well, I'm a buyer and you're just a broker, man. Like, again, I've been doing this for a while, and, had a decent portfolio, plenty of properties I didn't need, to prove to anybody. But I think that's the biggest thing is, even my agents, these guys look at deals every day. I mean, we're eat, sleep, breathe. We see appraisals, we see what's closing, we see who's operating. And so I think when you call a broker, make sure that you don't have like, that little chip on your shoulder that you are somehow so intelligent and they are just a broker. You're not going to build a relationship that way. And it's not true. I mean, these guys, a lot of these brokerage firms, I mean, they're seeing so much data from current owners, right? They're seeing the P&Ls, constantly underwriting deals that, they might never go to market with those deals, but they're getting that data and looking at that data every day. These guys know what they're talking about for the most part. I mean, there's obviously the guy that started last week who doesn't, and you probably might know more than him, but, be careful of who you're on the phone with and how you treat them. And listen to their advice. They are salesmen, right? We're all salesmen. But again, I know what I'm talking about. I know the Middle Tennessee market, and I know it probably better than 99% of the people that pick up the phone and call me. And I'm going to represent the property. And my job is to build relationships like we talked about, right? And so I'm not going to misrepresent something on that property, and I want to build a relationship with you to when you get ready to sell that property, you're going to call me, right? And so, I've told many people, don't buy that property. I don't think it fits your investment criteria. I don't think it's a good fit for you. That doesn't mean it's not going to sell to somebody, but for what you're looking for, it doesn't work. And I'm quick to tell people that, again, because I have long-term thinking when I have a conversation with you, and not just the one and done.
Absolutely. Yeah. It's very much a symbiotic relationship, right? Like, you obviously have in the initial stages have a little bit more of the leverage because you're the one who has the deals, but ultimately as that relationship grows, it turns into now you want to maintain that relationship. So when they go to exit the deal, you're the first person they want to call as well. And, it kind of flows in that way so that you're always working with each other. And then ultimately, we all want those pocket deals, the off market deals that eventually, if you prove yourself as an investor, I imagine that's when, you get that deal. Like you said, you're a matchmaker, exactly who you want to call when a deal, comes across your table.
Yeah, and I think I learned that from the brokerage side, but also as the buyer. I remember, I won deals just because, my train of thought went, because I was going to get the deal done, right? I was the sure bet to get the deal done, not maybe because my, offer was the highest, and there was, I had built this relationship with the broker, and he knew I could get the deal done and was going to do what I said I was going to do, right? And I think that's, I've experienced that on the buying side as the buyer, and on the seller, and then on the brokerage side, when the REO stuff started kind of drying up, I knew I had like, a couple of these properties left to sell right before, this whole thing was done. And I told people, like, I have a gold block, like, who do I get to choose? At that time I was working as a buyer's agent a lot. So, I'd find these deals, who do I take it to? Right. And I mean, there was a list, and the guy at the top of the list he was a sure bet that I was getting paid. Right. And that my family was going to be able to eat. And so that was really the deciding factor. He had never backed out on deals. He just always did what he said he was going to do. He had the capacity to take the deal down. And, same thing, right? I had people in the past, when I'd go to list something for them, right, to resell it, they're making a couple $1 million, and they try to get me to bring my commission down to, 1%, right? And there were days when I probably had to do that in the beginning. And then they call me the next week. Well, I'm ready for the next deal. I'm like, man, why would I bring you anything, right? You just cut my pay down by 66%, right? Or whatever it is. I don't ever call me again. You just made $1 million off of something I brought you. And so, taking good care of those brokers, and, don't do that to them. And if you want to stay at the top of the list, I mean, if you don't really care about building relationships, do that. But, just think about that. They have all these brokers right now have thousands of people calling them right now. What's going to set you apart?
And you really touched on a big point that I think is another kind of misconception, especially right now, right? The way that as we touched on earlier, there's so much capital right now that, really a lot of deals are really coming to that highest and best, right? And yes, that's great. And that makes it, I don't want to say easier, but it makes it, if you can be the person to offer that, then sure. But ultimately what it comes down to is, can he get the deal done? Right. And those are the people that are going to maintain that relationship, is because, like you mentioned, you have someone, they're going to get the deal done, and they say what they're going to do. And I just feel that there's that misconception right now, because there's so much capital that everyone's like, oh, we can get a deal done. I've got, $2 million waiting, but really it's about being able to actually take it across the finish line and get it done.
Yeah. So, I mean, when we're vetting deals right now, or we do something on price and are looking at offers, what's the resume, not only, in the resume, do they own something locally? Are they out of state? How big a deals are they? Have they done Freddie and Fannie debt? Have they done debt with somebody we might know, right? The debt side, have you talked to a lender? Are you pre-qualified? Are you, raising capital that you actually don't have right now? Is it you by yourself? Are you the decision maker? Sometimes we're talking to somebody, and then all of a sudden we figure out, they've got, the man who they have to run everything by, how convoluted is that? And so we're looking at all that, and, our job is, we're just the messenger, right? So we just take that back to the seller and go, yeah, this guy, his offer's higher, but he's never bought anything. He's not talked to a lender. And then this guy's got, maybe $100,000 less on this deal, but, he's got the resume, he's done deals. He works with the management company that we refer a lot of business to. We know who he is. We know on the last deal he bought, he didn't try to retrade. He did what he said he was going to do. So, and then, again, it's ultimately the seller's decision, right? Which offer he wants to go with. But, those are all things, terms, I wouldn't say as important as price, but it definitely is a weighing factor, right? In getting that deal and landing that deal. Because, again, the last thing they want to do is, go with this gentleman who isn't ready to buy, they do an inspection, disturb the man's business, go through all the units, and then come to find out backs out because of a $5,000 repair. That was a simple repair, but because he's a newbie and he went to a guru seminar last night, he thinks he knows everything and won't listen to us and the property manager. So now we're gonna have to go back to the other offer, which is probably gonna be lower now because he knows, so those are like all the kinds of things to think about when you're doing this. And I was on this last podcast and we were talking about that. Like, I have a friend and she keeps telling me she's missing out on deals. And I called her, I'm like, hey, why does she keep missing on deals? She's got, thousands of doors. And he goes, well, because she's competing against the person who has 30,000 doors, right?
Right.
Her offers are just as great and just as well put together. Everything's fine, but she owns 5,000 or 10,000 doors. This person owns 15,000. That person owns 30. They go with the person that owns the most doors.
Yep. Yeah. The institutions are in it now. And unfortunately, that's even pushing out who, 5 years ago were the big players. So awesome. Well, we're getting towards the end here. So I got 5 questions that I asked all of our guests here at the end. We call it the final 5 questions. Question number 1, what's the best advice you've gotten from a mentor?
Fire bad clients.
Love that. Straight to the point. What is it about your career that makes you feel like you're fulfilling your why?
Helping people find financial freedom through multifamily investing, right? I mean, that's why I got into it. That's what it's done for me in my life. And, I've helped some great clients and they've become close friends. And so I just want to continue to teach people how to find financial freedom and legacy wealth through multifamily investing.
I love that. That's awesome. What's your favorite non-real estate or investment related book?
Oh man, I am not a reader. I was on Jake and Gino's show and I was like, okay, I'm coming out of the closet. Like I hear all these guys talk about reading books and like I have learning disabilities and like college dropout, right? So I'm not a reader. I have to do things. And so that's how I've learned. So I don't read. I listen to podcasts, which are sometimes, sorry to say that. But it's hard for me with my brain to concentrate. So I really don't read.
Totally fair. Totally fair. Okay, if you could have any superpower, what would it be?
Man, it's crystal ball to know what's going on in the market, right? Like, it's not working right now. Man, I don't know. That's a good one. I mean, if you have too good of memory, right, you remember the bad stuff just as well as the good stuff. So I don't know. I'm not on that one.
What, so this is a bit of off on a tangent here, but real quick, if you did have a crystal ball, I know no one can predict, but you're on both sides of it, right? You're an operator, also a broker. Where do you feel like there's an asset bubble? Where do you kind of see the market headed as we move forward?
You got about 45 minutes?
Yeah, right. I know.
So I watched The Big Short the other day, maybe a month ago for the first time. And I lived The Big Short, right? I got into real estate at that time. I was flipping houses. We were getting these bank loans and they were giving us checks for 20% more and not bringing in any money. And the one thing that stuck out in my head was the stripper who owned like 5 rental houses at that point, right? And you're just like, oh man, how did nobody see this coming, right? And the mortgage brokers, burning money and just, I literally saw stuff like that, right? I don't know where I got my smarts. Maybe it's from these good mentors I had, but I just never lived that way, right? I always lived below my means and paid cash for things and, kind of tell people that I have Robert Kiyosaki and like Dave Ramsey, like fighting inside my belly. And so I lived this pretty normal lifestyle. But I saw that and I kind of like, oh my gosh, we're in that again, right? I think the difference right now is, people are putting down cash into deals. That they weren't back then. That would be the one thing. But I just said this on the last podcast is like, I think you got to have a long-term thought and hold process on if you're buying something right now. Because if, time heals all wounds, I say in real estate. And again, I think if you're trying to exit in 2 years and most of your IRR is, from the property appreciation, you're going to have some disappointed investors that thought they were going to get their money back in 3 years. But if you have a long-term mindset and you're prepared to maybe hold it, longer, than you had anticipated, you're fine, right? So those are my things, and again, debt, right? Like I had to refinance stuff in the crash, right? So values went from, on small duplex 150 down to 70. Well, going back to a bank and having them have appraisal done, and you're upside down, right? And so you're kind of at the mercy of the lender to go, I'm going to take that financial hit for the next year or two, to continue this relationship. So but if you had long-term Freddie Fannie financing and you're good, right, and you can live through just I'm not talking about a crash, but I'm even just talking about a lull. Rents are going to go up, some of the other things like insurance. I mean, we did really well during the crash. I mean, towards the end, rents started going up tremendously. All my taxes had actually gone down because the city went and reassessed everything, right? The bank notes I had actually started to drop. When we got into this, a 6.5 was a great interest rate. So we started seeing those. So, our fixed purchase price, but then all of our costs started coming down. So, and then the rents started going up. So, but again, if in that time, if I had to sell, right, then I probably would have, been writing checks to lenders to get deals.
Awesome. Yeah, I love that. I that's really like you referenced The Big Short, and I kind of almost am seeing some of these similar things as you are as well. So it's definitely one of those keeping an eye on certain things, but certainly there's ways to mitigate, and like you mentioned, the long term and putting cash down, different things like that. So awesome. And then very last question, what's the best way for people to get a hold of you and reach out if they want to know more?
Yeah, so RIA-inc.com is my website. You can learn more about the brokerage firm, myself, all the podcasts I've been on, my agents. I always do this. I've been doing it since my first podcast. My cell number is 615-479-8737. You're more than welcome to text me or call me anytime. Just know that it might take me, a couple of days to get back to you sometime. But I love talking this business. If I can help somebody, like I said, find the financial freedom and grow long-term wealth through multifamily investing, I'm all about it.
Awesome. I love it. And we'll link all that in the show notes. Dave, thank you so much. This has been incredible. I really appreciate you coming on.
Well, thanks, Johnny. I appreciate you guys doing these podcasts. I know it's a lot of work. And if you're watching these podcasts, understand how much work that these guys put in, filming these things, editing them, the social media that goes involved, the booking of all these people, give them, thumbs up on this and like it and share it. Cause again, it's a lot of work, and, I've chosen not to do it. I just love to be on these, and you guys do the work. So I appreciate that.
Absolutely. Appreciate it very much. Thank you. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. We'd love to know what you guys think, and we will see you on the next one. Thanks so much.